Hey everyone, it's Yuri here with the bekavacteam, and we're just doing a little video here, real estate update, and we're going to give you a breakdown of what we forecast, what we see happening in the mortgage with mortgage rates and what the banks are offering here going for 2025. What they're currently offering. Vince is coming on. He's going to break this all down for you guys and what we see happening in 2025. We do predict that the Bank Canada is coming out this Wednesday, 29th. We think it's going to be 0.5 basis point. And don't hold me against it, but we do predict also in March, I think it'll be another 0.5 basis point cut. And I do think in the third quarter, we'll see another interest rate cut happening this spring to market up. So stay tuned. We're going to walk you through this shortly. I'm going to walk you through a quick chart of time of the interest rates coming down. All right, just wanted to walk you through this chart here. I think it's a great indicator of what's happening. We've been seeing these cuts over time, and the last two big interest rate cuts from last year that taken us to January. Right now, the interest rate is at 3.25%, and as you can see, the chart over time has been coming down, and we do predict that they're going to come out, in January 29th, that they're going to come down with another 0.25 basis point, and we do predict also, I think within the March time, the spring market, we might see another 0.5 basis points coming down. Don't hold me against it, but we will keep you updated. This is a great chart. You see it's gradually going down, and they're trying to spring the market up in the economy, and it's a great thing that we always keep an eye on what's happening. We always have Vince on there. He's on top of what's happening with the mortgages out there and what they're offering everyone too. So he's going to be on here shortly. He's going to walk you through what he sees, and we'll talk a bit more what we forecast in the future. Well, everyone, here we go. We got the one and only Vince Vincenzo, level 2 mortgage agent, not a 1, level 2. He's got access to A, B, and private lenders. He's got access to everything. Vince is going to start walking us through. He's going to take you through what he sees right now, what the banks are offering right now for mortgages. If you're looking to get refinance, your mortgage is coming up, or you're looking to buy, Vince is going to take you through some articles right now he sees and walk you through what's happening in the mortgage world. So say hello, Vince.
Thank you, Yuri. Hey guys, welcome back. Happy New Year's 2025. We're going to go over a couple of things. I'm going to one more time recap the effectiveness of using the changes back in December and how you can take advantage of it, whether it's to borrow a little bit more or to help control your finances. And then we're going to talk about the rates. Obviously, big news coming up on the 29th. We are expecting a rate drop. So I'll give you the rates, what they are now, and then we'll take a look in a couple of days, see what they are after the drop. So stay tuned, guys. Hey guys, welcome back. 2025 is here, so let's get right to the point and look at some numbers. First off, I want to keep in mind that a couple of these lenders only lend in BC, so we're going to disregard those guys. Let's just go over very quickly the best 3 and 5 year variable rates available. Variable rates is prime minus a certain number. The current prime rate right now is 5.25. So looking at the best 3-year variable, we're looking at a mortgage from LendWise would be prime minus 0.55. MCAP is also sitting at 0.55, and then we have Scotiabank sitting at prime. That's not a good number. So again, prime minus 0.55 is looking like it's the best option right now for a 3-year variable. Moving next to a 5-year variable, we are looking at prime minus 0.9 so far as the highest. These guys, prime minus 1.01, although a great number. As someone that is licensed to broker in Ontario, these lenders are not an option for me. Moving down the list, another 0.9 option with Manulife, another prime minus 0.9 with, looks like here, Marathon Mortgage Cap. And then moving down the list, another prime minus 0.9 at Stride Mortgages. Again, all of these lenders are A lenders. I work with all the A lenders, but these ones are the best ones that I've worked with in the past and have great relationships with. Moving on to the best 3-year fixed rate. This is just a flat rate the lender offers. Nothing changes throughout the term. So we're looking at a 4.44 right now with a B2B bank. Desjardins now takes the lead at 4.34. And as we move down, our best 3-year fixed looks like it's going to be Scotiabank at 4.19. Also Meridian 4.19. The last and one of the most popular choices for a term is the 5-year fixed. Looking at it going down quickly, we're looking at a 4.29 so far as the lowest at B2B Bank. 4.29. We have a 4.19, and that's with Meridian. So looking like the best 5-year rate that I can get is 4.19. Well, it's been a month since December 15th. All those mortgage changes have been implemented, and I'm sure you've heard of it for a very, very long time. I'm going to show you with numbers how these changes affect you, whether you're buying, refinancing, renewing. These numbers hopefully help you visualize how this impacts you. Scenario 1, Scenario 2, same mortgage amount, very similar interest rate, exact same term, but the amortization is 5 years higher for Scenario 2. Amortization with 25 years is $4,770 monthly payment, whereas 30 years is $4,428. That saving of $370 per month is attainable by increasing your amortization. Increasing amortization can also increase your borrowing power. Maximum purchase price on the left has amortization of 30 years, whereas the maximum purchase price on the right has amortization of 25 years. Both files have $144,000 household income with $100,000 down payment. Now, a lot of my clients ask me, Vince, why would I even consider 30-year amortization when I can qualify for 25, especially because the extra 5 years of interest is a lot. I agree, 100%. But you can always take that 30-year amortization option, take the lower payment, and if you have the difference and you want to aggressively pay it down, use a prepayment strategy. There's two of them. You can either increase your monthly payment or have a lump sum payment. The option I'm showing you here is if you pay down $370 per month, that difference between the two mortgage rates, you can effectively reduce your total amortization by 4 years and 6 months. The other option is to pay once per calendar year lump sum payment. I am calculating 12 months times $370, my total being $4,440. If you were to put down this much every year, you can effectively reduce your total amortization by 4 years and 8 months.
Well, Vince, thank you for that. It was very informative. I've learned a lot too. I hope that helped you out too. I just want to break a couple things. I do have a lot of clients, and Vince is going to shed some light here with my clients that do send, and Vince definitely knows what he's talking about. So the two things we do get approached at and Vince will help out here, is would you go with a variable mortgage, or would you go with a 3-year or 5-year fixed mortgage?
It all depends on your plan, what you want to do in the near future, right? Naturally, with the rates potentially coming down over the next couple of months, if you qualify for the variable, I suggest trying for the variable. Take advantage of the rate drops. Once they drop down to a reasonable level, or once you're comfortable with it, you can always lock it in, right? But if you plan on staying there for a long term and the variable rate you can't really qualify for, then 5-year fixed obviously is your best route to go.
That's good. That sheds up a lot here, and I do mention that, but I just want to clarify for all the viewers out there that there's some options there, and then the variable is you hold on to it if you do qualify, what you're saying, and try to take advantage of the rates, which we do have some forecasts of coming down in the market. So, well, I appreciate that, Vince, giving an update to all the viewers. I hope that helped and informative. If you got any more questions, you want to reach out, come out here. Vince can definitely help out if you're looking to get a refinance, remortgage, or your first-time home buyer. Vince is our guy. He's got access to everything. He can help you to any lender he's got, from A, B, and private lenders, correct?
Thank you, Yuri. And if you guys have any questions about buying homes, what areas to look into, or any questions about the process in general, Yuri here, he's a wealth of knowledge. He's helped a lot of my clients close the toughest files, the toughest negotiates, and the worst other side agent. Yuri works with them, no problem. Yuri's your man here.
Thanks, Vince. Appreciate that.
No problem.
All right, guys. Cheers. Stay tuned and for our next update next month.
Cheers.
Everything we touch turns to soul.